Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec. On Wednesday, the 13th of May, there's a very slight negative sentiment that's pulled back into markets once more. We've seen that creeping in last night into the close on Wall Street, a fairly strong move to the downside, which has really hit equities today. Where the European markets are around sort of 1 to 2% all lower. US futures not really doing a great deal, actually slipping back initially. So that's not really helping matters either. Now, in terms of how Forex markets are looking, there is a fairly sort of muted look to it. The dollar remains sort of broadly under pressure, a little bit of sort of risk negative of a skew, but I think generally speaking the dollar fell yesterday on the back of the weaker than expected US inflation data, which started to pull yields lower again, and that hit the dollar, and sort of you continue to see these ranges playing out, and I'll talk about how that is setting up when I go through the videos later. But it's it's an interesting theme that continues to run through these Forex majors, that they're all fairly much ranging, to be honest. Sterling picked up initially today after the better than expected GDP numbers for the UK. Growth was I say just 5.8% negative. Expectation of 8% negative in March. Now this sort of leaves the quarterly data 2% negative for Q1. That's the prelim number, but the ONS has suggested that these numbers are going to come under significant revision, likely in due course. So don't take too much from that, but nonetheless we do see sterling, which has picked up a bit. You've also got the Kiwi dollar, which is under pressure today, 1% negative on the day against US, and that's come on the back of the RBNZ, which didn't move on rates, but it certainly had a dovish outlook and started talking about the prospect of negative rates for the Kiwi, hitting that overnight and really is under a little bit of pressure. The Australian dollar holding up okay at the moment, but broadly speaking the Aussie is the only real sort of risk element that's in the positive territory today. Oil continues to consolidate, but slightly lower now. And as we sort of come into the European session, it's that move lower is sort of starting to generate. And I've talked on the daily report that this consolidation that we've seen in the past week or so on oil is starting to drift over, similar to what we saw back in early April. Now that drift over actually accelerated down as we went towards the contract expiry for that May WTI contract. So that is the fear, that we start to see oil prices dragged back as the June contract expiry comes for WTI next week. So be careful of that. But broadly speaking, we are a little bit edging risk negative, certainly on equities anyway. Now, in terms of data points today, we've got US PPI, which again will sort of paint a picture of how the US is sort of faltering on inflation, as everyone is really. You've got the headline inflation on PPI expected to go negative by 0.2% and core down at 0.9% from 1.4%. We're also looking out for the EIA oil inventories, another weekly build of inventory crude stocks. That is going to be a 16th consecutive week of inventory build for the EIA. But as you can see, these inventory builds are starting to fall away slightly. Well, they have done in the past 3 weeks anyway. Will that continue today? It's expected to, only slightly though. So that takes me on to my chart today, which is Euro Yen, which I find is a really interesting chart at the moment. Euro Yen rallied sharply. Let's actually sort of come back a little bit, because we can see this old floor of around 16 figure to 17 figure, the old floor, which was a key sort of basis through 2019. That was again a basis into early 2020, actually March, that basis of support held, but then broke in April, rebound, failed, and another rebound has failed since then around that old support, which is now turned into overhead supply and new resistance, building a downtrend. That rally that we saw in the last few sessions has fallen over. RSI, at one point yesterday it was up at 49. That was the level at which it failed, basically around the April and early May highs. So building this downtrend, failing on the RSI. MACD lines just still edging higher, but those stochastics are losing steam, aren't they, on the daily? Let's look at the hourly. You can see that on the hourly chart, this recovery uptrend has been broken this morning by a move lower. You've got the momentum indicators, which are turning back into more of a corrective line now. You could argue that, support 1594, let's see if we've got that. Yeah, just a shade below that, but essentially that is the very, very early support there. If that breaks to the downside, you really do start to sort of gain momentum in the traction lower, because look at this. Negative divergence on the higher high on the price, but a lower high on RSI, lower high on MACD. So negative divergence is starting to form on that hourly indicator as well. So yeah, this is starting to turn lower. So is this another rally that gets sold into and starts to retest 1440? I think it, given the failure, and if it fails and closes back under 16 figure again, I can see that is going to be tracking lower once more. Towards that lower 1440. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos on YouTube, but also you can watch our Trader Talks videos where you can gain top trading ideas.